eBay businesses, online stores, resellers, today's video is for you because I'm going to be going through everything you need to know when it comes to tax here in Australia. Hello everyone, my name is Ethan Rushock, and as I said in that intro there, today I'm going to be talking about tax and bookkeeping and accounting for online stores, eBay businesses, resellers, anyone in that type of industry. Now, I will be assuming that you've already established that you're a business. If you're not sure if you need an ABN or if you're a hobby or a business, make sure you go and check out the video I've done on hobbies versus businesses, because that'll help you understand whether you actually do need an ABN and therefore whether any of this will apply to you. So I'll be focusing on things like eBay and what kind of challenges that brings with it for people that sell there. I'll be talking about people that do reselling and then some of the challenges that has of not getting receipts when you buy from things like garage sales or Facebook Marketplace. And then I'll be talking about online businesses in general, in particular focused on retail stores and some of the expenses that people may not realize that they can potentially claim as a tax deduction. And obviously I'll talk about record keeping in general, stock, cost of goods sold, all those fun things. So let's get into it. The first topic I do want to cover is having an understanding of tax and why that's going to be important for your business and to make sure that you're maximizing deductions, etc. So you need to have a basic understanding of how tax is going to work. So on a real basic level, we're going to have sales, then we're going to have less expenses, and that's going to be our profit. So that's a real basic of it, and having that understanding will help. But obviously we want to dive into deeper of, well, what makes up sales? What makes up our expenses? What makes up our stock? What makes up our cost of goods sold? And this will all determine what makes up that final profit line. And then you can work out how much tax that's going to be. So I'll start with sales, and that should be the most straightforward thing because it's going to be the sum of all your sales. And that's going to include whether it's through eBay, Amazon, whether it's through an online store, or whether it's an in-person transaction. You might sell something through Facebook Marketplace. All these things combined are going to make up the sales for your business. The reason why this should be simple to track is a lot of this should be being paid into your bank account. If you're running a store, it will likely produce the invoice. If you're running eBay, they're going to handle that side of things. Same with Amazon. Probably the biggest one that you're going to have the most difficulty tracking is if you are selling stuff in person, and this might be a bit of a one-off thing, making sure that you produce an invoice to your customer for that or receipt. Making sure you keep track of that income, especially if it is paid in cash, making sure you're running that through your business to include it. One thing you may want to consider, and I can get to this more when we go into record keeping, is do you want to track each of these sales channels separately? I think that's a really vital thing to understanding how your business is going if you're using multiple different sales channels, is are you keeping track of how much am I actually generating through eBay? How much am I generating through my online store? How much am I generating through Amazon? So you can have an idea of what is working. Now the next thing that should be pretty straightforward is expenses. So I'll bring up here some of the more common expenses, but you're going to have things like your phone and your internet if you're running the business from home. Have you got home office expenses, packaging, advertising? Something people do often forget about is car expenses. Because if you're using your car to go pick up stock, whether it's to take items to the post office to send them off, all these kind of things, it's definitely going to be a portion that's claimable. So make sure you go and check out my video I've done on car expenses, because I'll go into that in more detail in that. But you don't want to forget about legitimate deductions. I talk about it all the time on my channel, is that the worst thing you could do is not claim an expense that you legitimately can claim. So make sure you keep track of all of these things so you don't miss out on legitimate deductions for your business. Now, probably the most challenging thing when it comes to expenses is going to be your purchasing of your goods, purchasing of the items that you sell. So I'm going to cover that in more detail as we go on through this video. The last thing I do want to touch on when it comes to the basics of tax is GST. So a lot of people will go, oh, do I need to be registered for GST? So GST comes in if your turnover is over $75,000. So if you're not meeting that for your online store, then you don't need to be registered for GST. There may be some situations where you do want to still register. So obviously seek advice from an accountant on those things when it comes to GST. Now, before I get into record keeping, if this is your first time here or it's your 100th time here, make sure you hit that subscribe button if you haven't already. Hit the like button because these things really help me grow this channel and I really appreciate your support. Anyway, back into the video. The next area I want to cover is record keeping, and this is an area that's quite often overlooked when people start a business, but I think it's one of the most important things in having a successful business. So it's not just about tax. Record keeping can help you have an understanding of what is profitable, what's not profitable, and an overall feel of where the business is at and what areas you need to improve on. So you've got a few options. The worst one definitely would be keeping all your receipts in a box or in a folder and not looking at them until the end of the year and then trying to tally them all up at the end. That's the biggest way that you're not going to understand where your business is at through the year. And two, you're going to miss stuff. You're going to forget to put receipts. Receipts are going to fade. that's what's going to happen. You're going to miss out on legitimate deductions and you're going to end up paying more tax. The next option is you could run some kind of spreadsheet. So you could use Excel, Google Sheets, anything like that will enable you to keep track of your income and expenses. This method definitely can work, but it's going to depend, one, on your Excel skills as to how good this spreadsheet's going to be and how much data you can actually pull from it, and two, how committed you are to keeping it up to date. Because I've seen people go, yeah, I'm going to run it on a spreadsheet. And then again, they come back to that same situation where they're doing it once a year. And that's when things get missed. And then three, my preferred option is definitely going to be some kind of accounting software. So when it comes to accounting software, I definitely would recommend Xero. I'm not getting paid to plug that, but it's just the software I do recommend to most of my clients. But any kind of cloud accounting software is really good for online stores because it's a cloud software. You're already used to dealing with online products. Therefore, it definitely fits your business. I won't go into too much details, but there's definitely integrations you can have. So you can have online stores that integrate into things like Xero. But the main thing with the accounting software is you can keep this up to date, ongoing, whether it's daily or weekly, but it's going to give you a good idea of where the business is at all the time, understanding, are you making a profit or are you losing money? So by having a knowledge of where that's at, it's going to make your business more successful in the long term. So the other cool thing with accounting software is you can have integrations that are going to help with the receipt keeping side of things. So with Xero, for example, you get access to HubDoc in most situations. So this software allows you to take photos of your receipts or email them in and store them in your accounting software. So you don't need to stress about the receipts fading. There's other softwares like Receipt Bank that do the same kind of thing. And these softwares are a real time saver and also great to keep yourself more organized. So you can see accounting software can have multiple different reasons for using it and they all make your life easier. They're going to be able to give you the ability to be on top of your business, have an understanding where it's at day to day. And two, they're going to handle that record keeping side of things. You can give this data to your accountant. They can go in. They don't have to rely on you providing a USB or sending over a shipment of data. They're going to get access to it through the cloud and they're going to be able to then focus on making sure that your business is maximizing its deductions, reducing the amount of tax, making sure you're structured in the right way rather than sorting through a pile of receipts. One of the main challenges I hear from people that are running a reselling business or an eBay business is what happens when I don't get a receipt? What happens when I go to a garage sale and I purchase something and don't get a receipt, or I buy something through Facebook Marketplace? Pretty much anytime you're buying something off someone that's not a business. Well, don't stress, there's definitely some ways you can counteract this. So the ATO's kind of minimum is you're going to want a date, you're going to want the amount, and you're going to want, they refer to it as a character. What is this transaction? Is it a buy? Is it a sell? Is it a trade? What happened? Why did this money exchange hands? So as I said, you're going to have situations where a supplier doesn't have an ABN. If you buy something from a garage sale, they don't need to have an ABN. They're not running a business. They're just selling some stuff. So it is going to be a quite common situation, but there are some things you can put in place. So the real basics of it is you want to make sure you're tracking these things. So you want to be making sure you're tracking the date of the transaction, what it cost you, ideally who it was purchased from, and what the item was for. So some ways that I've seen clients do this before, they have their own receipt book, they write that out when they buy it. So they go to a garage sale, they go to a thrift shop, they can't get a receipt for some reason. So they write out the date, where they purchased it from, the amount, and what it was for. So that's a real basic way. You may run this on a spreadsheet. So you might have a spreadsheet of, for each month, all the different transactions where you didn't get a receipt and what they were for. And this is going to help support your case if you get an audit. So the more records you can keep of a transaction, the more likely you'll be passing the audit if it happens. So it might be things like screenshotting a conversation where you discussed a price on something for Facebook Marketplace. Or it might be a screenshot of text messages. Or again, like I said, the address and the person you purchased it from. All these different things are going to help. But obviously having a centralized spot, whether it's a receipt book or ideally something like a spreadsheet, is going to then make it easier to keep track of all of these totaled rather than scrolling through your phone trying to find 15,000 different screenshots. And then there's going to be other things like whether you're using bank transfers or using a card to purchase things. All these different things can help build that case for supporting that transaction. One other thing that is really important here is if you're just claiming the legitimate deductions to the business, it's going to help you overall because the ATO look at things like benchmarks. So your cost of goods sold versus your total sales for other people in a similar industry, if that's in line, that's going to help support your case and not bring up red flags on their system, where if you're outside of those benchmarks, then that is going to be the potential for a red flag that could trigger an audit, and then you're going to have to go through all these things. So making sure you're just claiming the legitimate deductions of the business is a good way to help make sure that you don't get flagged for an audit, or if you do get flagged for an audit, it gives you much more chance of passing it successfully. Now the last area I do want to cover today is stock and cost of goods sold. And people often overlook this, but I think it's really a vital thing to, one, make sure you end up paying the right amount of tax, and two, have a great understanding of where your business is actually at. So having an idea of how much stock you have on hand will definitely play into how much profit you make, because having an idea of how much stock is going to affect directly the cost of goods sold on your tax return. So you need to have an idea of how much stock you've got on hand. Now the ATO do state if your stock movement is under $5,000, it isn't mandatory for you to do a formal stock take, but I'd still highly recommend it because this is going to allow you to have a better idea of how much profit your business has actually made. Now it's going to depend how you're tracking things through the year as to how you approach this. So ideally, you'd be tracking your stock through the year because you want to be tracking your profit through the year. So some people will do this and they will account for stock every time they buy and sell a product. Now this is obviously normally done through some type of software, and then they do a stock take at the end to confirm that. So that's definitely one approach you could take. The other approach some people take is they just lump the total cost of all those purchases of items they're going to sold. They do a stock take once a year or once every 6 months, and then that works out how much the cost of those sales actually is. There's different approaches. It's going to depend on what your record keeping is like, if it might be historically, or what you're wanting to achieve going forward as to how you approach this. The other thing you've got to work out is how are you going to assign values to your stock? So in most situations, it's easy when you're getting an itemized account of what you're buying. But what about if you go buy something in bulk? So you might sell video games and you go and buy 500 video games from someone on a personal sale through Facebook Marketplace for $500. How do you assign a value to that? So some people may use an average cost of goods sold method. They might go, okay, I bought 500 items for $500. I'll assign each item a $1 cost. Others may want to go through and itemize that. As long as you're not doubling up on it at the end of the day, that's the main thing. And obviously the more accurate you want to get it, then that's going to make your overall records more accurate. With something like this, you just want to be consistent and use the same method all the time because it will make your record keeping easier, and it also make your reporting much more consistent. You don't want to be changing methods and going, oh, this is how I'm going to do it this time and do it this time, because then it's going to throw your record keeping out. And that's not only going to cause issues tax-wise, but it could also cause issues when you're trying to reflect on, is this business successful? Is it profitable? So as you can see, a lot of these tips that I've talked about are all about record keeping. The better records you can keep through the year is going to, one, make your life much easier at tax time, and two, it's going to give you a better understanding of where your business is at, where you're making profit and where you're not making profit. Obviously, the more receipts you can get, the more easier it is because you've got the receipt. You don't need to create anything to help support that, but it definitely can be solved when you don't get a receipt for an item. Don't stress, put a system in place that works for you, and therefore you're going to maximize your deductions and therefore minimize the amount of tax you pay. And then stock and cost of goods sold are really important. Put a system in place that works for you, keep it consistent, and it will keep your reporting simple, and it'll also make sure you're getting accurate figures for tax. I really hope that video has been helpful for you. Make sure you check out some of the other content on my channel. I thank you for being here, and I'll talk to you again soon.